Volatility. We've been seeing it over the last few weeks and even the last 2 days. We've had another bearish reversal. It appears to have maybe been rates, inflation induced. Can you give us your view of the S&P 500?
Sure, Abigail. Look, in this business, volatility tends to beget more volatility. We've transitioned from a phase of historically low volatility over the previous 18 months. So it sort of exploded here in the short term, but I don't think it has a bearish connotation per se. In fact, we think what we're staring at with the chart of the S&P is consistent with a textbook 10 to 12% correction within an ongoing bull market. I'm going to turn and show you the chart of the S&P futures here. So this takes us back just about a year. The yellow line there, that's your key support. And importantly, you see those twin exhaustive downside reversals that we saw 2 weeks ago. Those twin tests of that 200-day should mark the end, once again, of that textbook correction. Now, of course, what's the straw that stirs the drink here? It's interest rates. We've seen interest rates, the fear of inflation picking up, and then in part, that's kind of given us this rise in volatility. If we bring up a very long-term chart of that 10-year yield, we can see it just over here to our left. Now, admittedly, this takes us back to the early 80s. So it's been 32 years since we crossed above this aqua line. That's your 50-quarter moving average. Obviously, you're not going to trade against that, but importantly, it comes to right around that structural resistance, that key 3% level, and the neckline of a potential bigger double bottom. I actually think that interest rates are reaching an inflection point, and when they back off a little bit, they ease, they consolidate that recent surge. That's going to provide more of a tailwind for stocks, and you're going to continue to seize upon those key tests of support in the S&P.
Okay, interesting. So if we do go above 3% or even do something quickly and then back down, depending on how the inflection point, do you think we see a new lower low in the S&P 500?
That's not what my work is telling me right now. Look, I think we're going to see continued consolidation of the recent uptick in volatility, but I'm not looking for a double bottom retest. I'm not looking for a lower low here. But of course, if interest rates continue to move at the pace they're going at, markets seem to have an issue with that.
Great stuff. Rich Ross of Evercore ISI.